In an era of unprecedented economic uncertainty, where global conflicts and volatile energy markets have become the new normal, the European Central Bank stands resolute, its sights firmly set on a path of monetary easing. This steadfast commitment, even in the face of escalating tensions in the Middle East and the specter of rising oil prices, underscores the ECB's unwavering determination to steer the Eurozone economy towards stability and growth. As the world holds its breath, anticipating the potential fallout of geopolitical turmoil on energy markets, the ECB stance has been unequivocal. In an interview with the renowned French financial daily Les Echos, Francois Villeroy de Galhau, a prominent member of the Governing Council, dismissed the notion of a mechanical reaction to fluctuations in oil prices. Instead, the Bank of France governor emphasized a measured approach, one that involves a thorough analysis of whether such shocks fuel underlying inflation and reshape inflation expectations. Villeroy's words carry the weight of a central bank determined to chart its own course, undeterred by the turbulence that surrounds it. When questioned about the possibility of delaying the long-anticipated first interest rate cut, his response was unambiguous: no, unless there is a surprise, we must not wait too much. This resolute stance echoes through the corridors of the ECB, where officials have converged on June 6 as the pivotal moment to embark on a path of monetary easing. Villeroy, a vocal proponent of such a move, has found himself in a chorus of voices, though the harmonies are not always perfectly aligned. While some of his more hawkish colleagues have expressed varying levels of conviction, with some merely acknowledging a rising likelihood, the overarching sentiment remains clear: the time for action is nigh. From the point we have sufficient confidence in the fact that we will meet the 2% inflation objective by next year, our duty is to minimize the cost in terms of activity and employment, Villeroy asserted, articulating the rationale behind the impending rate cut. That is the sense of a first cut in June. Yet, even as the ECB prepares to take its first step on this path, the journey ahead remains shrouded in uncertainty. Rate setters within the central bank are divided on the extent of easing to commit to, with Villeroy signaling subsequent future cuts at a pragmatic pace. This pragmatism, however, is tempered by a willingness to adapt should external shocks threaten the delicate balance of disinflation. We will always have the capacity to adapt this if an external shock threatened disinflation, Villeroy cautioned, acknowledging the ever-present specter of global turmoil that could upend even the most carefully laid plans. In this era of economic upheaval, where certainties are few and far between, the ECB's steadfast commitment to its monetary policy goals stands as a beacon of stability amidst the storm. As ordinary citizens and seasoned financial professionals alike grapple with the implications of global events, the central bank's unwavering pursuit of price stability and economic growth offers a reassuring constant in an ever-changing world. Through the lens of Villeroy's words, we catch a glimpse of a central bank determined to chart its own course, guided by data and economic imperatives rather than fleeting shifts in the global landscape. It is a stance that resonates with the core principles of monetary policy, a commitment to safeguarding the financial well-being of the Eurozone, even in the face of uncertainty and turmoil. As the world watches and waits, the ECB's resolute stance serves as a reminder that in the midst of chaos, there are institutions committed to steady hands and unwavering principles. It is a lesson in resilience, a testament to the enduring power of sound economic decision-making in the face of adversity. And as the global economic landscape continues to evolve, the ECB's unwavering path may well serve as a guiding light for others seeking to navigate the choppy waters of uncertainty.